Imagine this. If you had invested just 10,000 rupees in Wipro shares back in 1980, it would be worth a jaw-dropping 600 crores today. Sounds unbelievable, right? Now, who wouldn't want returns like that? But here's the big question. Can you replicate such success? Let us find out. Hey there, welcome to holisticinvestment.in, where we break down the age-old debate, direct stocks versus equity mutual funds. By the end of this video, you will know what's right for your portfolio. Plus, stick around, we have got a free consultation link in the description to help you get started on your investment journey. You have probably heard the success stories of stocks like Infosys, TCS and MRF delivering massive returns. But is it realistic to expect your investments to skyrocket in the same way? Let's dive deeper. Direct stock investment means you're putting your money into individual companies. But here's the catch. Stocks are unpredictable. For example, let's look at these returns. This data is of December 13, 2024. So HDFC Bank, 7% over 3 years, 8% over 5 years and 14% over 10 years. Asian Paints, a 10% decline over 3 years but 12% growth over 10 years. Sun Pharma, a stellar 34% over 3 years but only 9% over 10 years. ITC, a whopping 25% rise over 3 years but a meager 6% over 10 years. Aren't these some of the best companies in India? Yet their returns fluctuate. Why? Market volatility. Stocks don't always go up and the ups and downs can be nerve-wracking. Why mutual funds shine? Because enter equity mutual funds. These are professionally managed investment options where your money is pooled with others to create a diversified investment portfolio. The result? Reduced risk and consistent returns. Let's look at some fund performance. JM FlexiCap Fund, 27% over 3 years, 25% over 5 years and 18% over 10 years. Edelweiss Mid-Cap Fund, 26% over 3 years and an impressive 31% over 5 years. Notice something? These funds consistently outperformed many individual stocks. Why? Because fund managers monitor the market, make timely decisions and minimize risk. So why do mutual funds perform better? Professional expertise. Fund managers adjust portfolios based on market trends. They don't buy and forget like many direct stock investors. Think about it. Do you have the time to analyze financial reports, track global markets, and identify the perfect entry and exit point for stocks? If not, mutual funds are your best bet. Let's pause for a moment. Do you know when to buy or sell a stock? Are you ready to handle the stress of market crashes? Can you afford to take risk without proper knowledge? If your answer is no, then why gamble with your hard-earned money? Don't just jump on the bandwagon of direct stock investing because your friends or social media suggest it. Make informed decisions based on your financial goals. Here's a fact. Over 2 crore Indians trust equity mutual fund for their financial goals. Isn't it reassuring to know you would be part of a growing community of investors who value consistency and professional management over gambling with their hard-earned money? If you're new to investing, start small. Equity mutual funds are like training wheels for your financial journey. They offer stability and teach you how markets work. Once you gain confidence, you can explore direct stocks. So here's the bottom line. Direct stocks can be rewarding but demand time, knowledge and risk tolerance. On the other hand, equity mutual funds offer balanced, consistent growth with professional management with lower risk. So are you ready to take the first step towards financial freedom? Hit the link in the description for a free consultation with our certified financial planners to create an investment strategy tailored just for you. Don't forget to like, share and subscribe for more such financial insights. See you in the next video. Thank you for watching.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.